The crypto spring obviously comes after winter, and it's after all the terrible news comes out. And if you think of spring in terms of weather, one day it can snow, then it can rain, then it could be sunny, then it could be warm, then it could be cold again. It's kind of a weird time. But over spring, generally the weather gets better. And that's what we see in crypto. So you get still bad news stories, but the market doesn't trade as badly around them. It tends to go up over time, but it's a bit frustrating because it trades sideways for long periods of time. And then suddenly it goes up in 2 days and then goes sideways and then corrects again, that kind of thing. And that's the environment we've been in. But if you actually step away, if I look at my screen now, Bitcoin's up 72%, ETH's up 45%, and Solana's up 140%. So actually, it's been a good year, just hasn't felt that way yet. Well, it's a complicated world because the actual economy's slowing down, and it's going to be relatively slow for this quarter and next quarter. But the markets priced this in last year, which people can't get their heads around. They're like, we want our recession and we want our crash. It doesn't really work that way because we had it last year. You know, in crypto markets, we were down 80% last year. People kind of forgotten that. So what the markets are doing is forward looking. So they're looking forward at where the forward looking indicators are showing that growth will return, but inflation will continue to fall. Unemployment will rise a bit. So that's a kind of more Goldilocks scenario with economic growth coming back without inflation. So that's what markets have been pricing. That's why crypto's been so strong this year, and stuff like the Nasdaq's been so strong this year. So I'm very optimistic generally, and I think we're in crypto spring, and we'll transition to crypto summer, maybe Q1 of next year. If you think of crypto as an economy, it needs money coming into the economy, right? Because it can't just be us retail lot, because we've all got our money in the economy. It needs to get new money. So that's why it's part of this global liquidity cycle. So when people get liquidity, they start investing in riskier assets like crypto, and it starts flowing in. So that adds liquidity to the market overall, which means that new projects get more traction, and it filters through the whole ecosystem. So money, like in any economy, this digital economy needs capital coming in. So that's what the institutions bring, but the institutions are also building on top of this. Everybody from Fidelity to Franklin Templeton to, I think it's Apollo. Somebody else announced today that I think it's UBS are building a mutual fund on Ethereum, tokenizing it. So what they're going to bring is use cases. And the finance system is the largest use case of all because it's vast. So that's another thing. Also, the institutions tend to invest in VC, so they're funding the new wave of projects. So if we think about it, about 62 billion went into VC investments in 2020 and 2021 and 2022, or 2020, 2021. That money got put to work by thousands of entrepreneurs who are building new applications, new opportunities. And that's what the space needs as well, because we've got this great technology, but technology is not enough. It needs to get to user level. What applications can we use where we don't even see that we're using crypto? So that's why institutions are really important. Also, it's important because things like ETFs allow investment advisors to allocate people's money. So it's not just like Goldman Sachs putting money in. It's actually all of our money, our savings and investments and that kind of thing. So it allows people to participate in this in ways that they couldn't participate before, because it was harder for them via investment advisors or financial advisors to actually access tokens. But this, when it's an ETF, they've turned it into an equity, essentially. Yeah, I mean, I speak to a lot of the institutions, both directly with my work at Real Vision, but also with my asset management company, Exponential Age Asset Management. And we've found that it's the latter, that everybody has pretty much done the homework. The pioneers just keep working through the bear market. Again, Fidelity, Franklin Templeton, a whole bunch of these guys. Texas Teachers Retirement System, they've been involved all the way through. Most other people have done the work. So actually what they need is liquidity and price. So there's not much liquidity around now that we talked about before. So if nobody's got much money, then it's difficult to invest money. But as the stock market start getting closer to all-time highs, people start making money. Let's say that eventually the Fed cut rates, well, then money starts coming into these kind of assets. So I think most people have done the work on it now. They understand it. And so I think we will see a lot of participation from institutions in this cycle, much more than last cycle. There was quite a lot last cycle, quite a lot, but it was a lot of family offices last cycle. This cycle, I think we'll see a lot of the pensions, endowments, stuff like that. It depends what price is doing, because had we have launched a spot ETF in November last year, nobody would have bought it because the market was going down or it was feeling terrible. But as the market is recovering and we're in spring, and normally the Q4 is a strong quarter, if you introduce spot Bitcoin and spot ETH ETFs into a rising market, you will start to suck in the investment advisors, the individuals who found it too complicated to hold their own wallets and do all of that kind of stuff. So it really depends what the market is doing. But I think on balance, it's positive. But really, it'll show up in 2024, 2025 when the cycle's fully underway. It just makes an easy way for people who are not used to the digital side of things to just use equities and get their exposure. So yeah, look, overall, longer term, it's very positive. It's just yet another on-ramp. Short term, depends what the price is doing. Price is strong, we'll get a bit of a panic in from the investment advisors and stuff like that. You know, from the work that I've done, if I look at the rate of change of the adoption, the active addresses, it should hit 1 billion this cycle. So what is that? How do we get there? I don't know. But there's a lot of things that people don't even know about, like Ticketmaster has issued 30 million NFTs. People don't realize that. So that was 30 million people who weren't crypto people, but because their Ticketmaster wallet, where they get their tickets for games and shows, they just drop NFTs into them. So, you know, I don't know how we're going to onboard the billion, but it feels like it's coming. It could even be, dare I say it, CBDCs. If somebody launches one, it could be from India, where they're working on their CBDC. So there's a lot of different avenues that will create the billion people.